All right, I see we're right here at the top of the hour, and I would like to welcome everyone and thank all of you for joining us today. If we go to the next slide, Hope. Today's webinar from the ABLE National Resource Center is on ABLE, the IRS, and taxes, what you need to know. And it is brought to you by the ABLE National Resource Center, which is funded through a grant from Prudential. We can go to the next slide. For those of you who do not know, or perhaps for those of you who do, a quick reminder, the ABLE National Resource Center, also known as ABLE NRC, is the leading comprehensive source of objective, independent information about federal and state-related ABLE programs and activities, including guidance on tax-advantaged ABLE savings accounts. Our mission is to educate, promote, and support the positive impact ABLE can make on the lives of millions of Americans with disabilities and their families. Our pioneering work in this area and subject matter expertise make us the foremost authority on topics related to the Achieving a Better Life Experience Act, ABLE accounts, state ABLE programs, ABLE-related policy developments, and comprehensive integration of ABLE and financial capability strategies for people with disabilities into public service delivery systems. Just going to do a quick check here with my colleague, Hope Price, who's providing us with some technical support on the webinar. Hope, can you make sure that we are on slide 3? I want to also let you know that our website, ablenrc.org, is the resource to find information on how to get started with an ABLE account, including comprehensive tools to help you identify the right ABLE plan for you, best practices for how to manage your ABLE account once you've opened one, and to read stories of other ABLE-eligible individuals and their families and the best practices they're developing as they're now using ABLE accounts to achieve a better life experience. I'm going to go ahead and hand things over to my colleague, Hope, to walk us through just some logistics around listening to the webinar before I introduce our presenters and get into the content of our webinar today. So Hope, and I also just wanted to give you the feedback, Hope, on my slide. We're still on the very first slide. So just want to make sure we're moving the presentation forward in terms of the slides. Hope, can I hand things over to you to share, for those listening to the webinar, any tips you might have for them?
Yes, sure. Maggie now has control. So today, the audios meeting can be accessed using computer audio or by calling in by phone. If you select computer audio, please make sure your speakers are turned on or your headphones are plugged in. If you do not have sound capabilities on your computer or prefer to listen by phone, please dial 1-929-205-6099, and the meeting code is 339-107-823. For captioning, real-time captioning is provided during this webinar. The captions can be found by clicking on the closed caption icon in your Zoom controls at the bottom of the screen. If you do not see the captions after clicking the button, please alert the host via the chat box. You may also view captions in your browser at www.street.net/PLAYR/event=NDI. For submitting questions, please use the Q&A box to submit any questions you have during the webinar. We will try to answer all questions. If your question is not answered during the webinar, or you are listening by phone and not logged in, please visit www.ablenrc.org. For technical assistance, if you experience any technical difficulties during the webinar, please use the chat box to send a message to the NDI host, or you may email Hope Price at hprice@ndi-inc.org. Please note this webinar is being recorded and the materials will be placed on the ABLE National Resource Center website along with all of our other ABLE webinars at ablenrc.org/resources/webinars. Thank you, Miranda.
Great. Hope, I just want to connect with you about, I know we're having some technical issues and that we've got, the team is working on that as well. Are we able to share the slides so folks, we can go old school and people can open up the PowerPoint, the PDF of the PowerPoint and follow along with us like we used to do decades ago? Would that be a strategy?
I will try to get on that.
Yep.
Yes.
Yep. This
Okay,
is
great.
Maggie. I'm going to put it in the chat box. I'm also seeing if I'm able to share the PowerPoint. Hold on. But I just
okay,
thank you,
put a
Maggie.
link to. Hold on one second.
All right, thank you, Maggie and Hope, for that. We know, I wondered if it was just my screen. Sounds like we're all experiencing that. We have some great information today, though, and guess what? You don't even need to really take notes because so much of the key highlight points and the resources and the strategies and practices, they're broken down on the PowerPoint, and we're going to be sharing that with you. So this will help to further incentivize everyone, not just to watch with the webinar, but also to download the information. And it looks like Maggie's got that fixed. All right, collective. Yay, kudos to Maggie and Hope. Thank you for figuring that out. We are now on the accurate slide and we'll move forward from here. Introducing our facilitators and presenters today. Up in the upper left-hand corner, you can see there I am. My name is Miranda Kennedy. I'm the director of the ABLE National Resource Center. I'll be joined in presenting the bulk of the content for the presentation today with my colleague, Lori Schaller, who's a manager of financial empowerment with the National Disability Institute and works closely with us here at the ABLE National Resource Center. Behind the scenes, you'll be getting responses to some of your questions from our colleague, Marlene Uliski. Thank you for joining us, Marlene. We also have other presenters we're happy to have here with us. Don Dill is with us and he's going to be giving us an introduction. He's with the IRS. He's a senior tax analyst with SPEC, which stands for Stakeholder Partnerships, Education and Communication headquarters. We also have Andrew Camaro, who has a Master of Science in Financial Services and is a certified financial planner, as well as also being an ABLE account owner. And finally, we're going to be hearing some important updates from Joey Hill, who is our ABLE liaison at Social Security Administration, and she's a social insurance specialist there. So let's go to the next slide and talk about our objectives for today. If we can go to the next slide, the Stephen Beck Jr. Achieving a Better Life Experience Act, or ABLE Act, was passed by Congress in 2014, so it's just over 5 years old. And ABLE accounts are tax-advantaged Section 529A accounts under the Internal Revenue Service Tax Code, and the IRS has provided guidance related to ABLE accounts. Today's webinar will help you maximize your ABLE savings, qualify for tax credits, which may result in tax savings, and help you access free tax preparation services. So we'll be providing, in terms of our kind of orientation here to the discussion, IRS is going to be giving an introduction to ABLE guidelines and proposed rules. We'll be talking about best practices around qualified disability expenses that are key for tax season, as well as tax incentives that can help build your ABLE savings. There are many of those. We've got them all broken out for you. We're also going to be sharing with you information we hope you know. If you don't know it now, you will know it moving forward on free tax preparation services and other resources, as well as I mentioned before, we're going to get a special alert from the Social Security Administration at the end from Joey Hill. So with that, let's take a moment and get to know our audience before we get started. So we're going to show on the screen a poll. I'm going to read it, and then we'll pause for about 30 seconds and let everyone pick their answer. We want to know where you're at. And so before we get started with the discussion, we'd like to ask, what ABLE options or tax advantages have you already used to help you save more in your ABLE account? And you can check all that apply. And if this applies to a family member, or maybe if you're a service provider listening, the people you're working with there, but certainly individuals as well. So we've got A through G options. And you can check all that apply, so hopefully more than one. Have you saved up to $15,000 or more if you were employed under Able to Work Act? Have you used the Earned Income Tax Credit, EITC, or the Savers Credit? Have you done an ABLE contribution from a special needs trust or a pooled trust, or used an ABLE state tax credit? Have you accessed free tax preparation services, or G would be none of the above? So if we've got that poll posted, there it is. Okay, we'll give you all a few seconds to a minute to answer those questions. I see a few folks put it in the webinar chat. If the poll took a second to pop up on your screen, if you could take a second to answer it in the poll, that'd be great. Okay, we'll give you 5 more seconds to check all that might apply. And Hope and Maggie, if you could help pull up the results, we'll go ahead and close that down. And all right, great. Okay, we can see apparently 65% of you have done none of the above. Okay, you're in the right place. The other next largest, oh wow, 20% of those who responded said that they saved up to $15,000 or more if they're employed under Able to Work Act. That's impressive. The Earned Income Tax Credits next up there with 11%, Savers Credit 4%. Hopefully people will be learning more about that. That's fairly new. Contribution from a special needs trust or pooled trust 7%, estate tax credits 10%, and free tax preparation service 7%. Okay, thank you. Let's go ahead and close that out. And thanks everyone for letting us know where you're at today. Sounds like you're in a good place with our presentation to learn some more about and potentially, hopefully utilize some of these strategies and resources and incentives. Okay, well, the next step we want to do is we want to talk about IRS and ABLE. And for this, we want to actually ask our friend and colleague, Don Dill, to give an introduction about the IRS and ABLE. Don, as we mentioned before, he's an IRS senior tax analyst with Stakeholder Partnerships and Education Communications Headquarters. And we've had a long relationship with him with National Disability Institute, our parent organization. And Don, I'll just hand things over to you to talk a little bit about IRS and ABLE and those proposed rules. Don?
Great, thanks, Miranda, and good afternoon to everyone joining the call. Privileged to join you today. Thank you for taking your time to join. As Miranda said, I wanted to thank NDI and the ABLE National Resource Center for a wonderful collaboration we've had over the years with them and the IRS and working on free tax preparation, one of our goals. But I also want to offer just sincere appreciation for the leadership of both NDI and ABLE National Resource Center as it relates to these issues around the ABLE accounts. They have been a great leader in this arena and have continued to push forward in getting more information. And that's one of the things that I'll talk about in my presentation today. Although the ABLE Act is, ABLE accounts have now been around for 6 years or so. In tax parlay, that's still fairly new. And with the way we have been going in tax law with 2 major tax bills since then, the work around ABLE accounts is really in its infant stages, and we thank and applaud NDI and the ABLE National Resource Center for continuing to work with us and moving forward as we solidify all the regulations that will be needed to clarify these accounts as we move forward. So let me quickly go on to the slides that I have for you today. I know we have quite a busy agenda, and you've got wonderful folks that you'll be hearing from. But I just wanted to go on the next slide, talking in brief. It sounds like most of you are at least aware of the ABLE Account Act, the Act from 2014, which created these ABLE accounts and allowed funds to be contributed to a 529 ABLE account. And the beauty of those accounts is able to accumulate money in those accounts grow them from an investment standpoint, and that growth would be tax-free. Obviously, the tax-free part would be when they are used for qualified disability expenses. And so what I wanted to talk about today, as I mentioned, we are in the very, if you will, beginning stages of creating all the final rules. We did create a base of rules back in 2015 under Notice 2015-81 for those who want to go and look. And that created the overall guidelines and baseline for the work that we're going to do on ABLE accounts moving forward. But in the meantime, because of those two major tax acts, the PATH Act and the Tax Cut Act of 2017, many new provisions have been added to the ABLE accounts, including, additional contribution limits. In addition, the Saver credit, I noticed in our poll, not many people have taken advantage of that. In addition, rollovers and transfers from other 529 accounts. And so the IRS is in the process right now. We just had a notice issued on October 10th, Notice 2019-0046, that was open for public comment until January 8th of this year, 2020. Seems like so long ago, but just a month ago. And so as we get the public comments on that, we will analyze and review those, and then be issuing some additional regulations that deal with these major changes to the ABLE accounts from the Tax Cut Act of 2017. What I really wanted to promote to you today is that although we are beginning our work around ABLE accounts, I want to tell you that the IRS does have some resources for you that I hope you'll take advantage of. We do have a web page on irs.gov. If you would go into irs.gov and type into the search box ABLE account, it will bring you to the ABLE page. There's some information there generically about the ABLE accounts and about the Tax Cuts and Jobs Act. We'll also give you, we have issued over the last 2 years a number of IRS tax notices, or news releases, I should say, giving some broad information about ABLE accounts. These are very good sources for you if you want to pass information on to other folks within your sphere of communication. We also have some publications, the biggest one being publication 907, which has all the tax information for persons with disabilities that I hope you'll have a chance to look at. And then last but not least, and this is probably one that very few people realize, that the IRS has our own YouTube channel. I know that's probably something most of you are up all night watching, the IRS YouTube channel. But we do have a wonderful, fairly short, about a 2-minute video on ABLE accounts that, again, I think is a good resource that you're sharing with other folks. So I wanted to make sure you're aware of the information we have out there, and as we continue to work with NDI and the ABLE Resource Center, we will continue to update that information. So Miranda, with that, I wanted to turn it back to you, and we'll continue on. And thank you again for having me on the call.
Thank you so much, Don, for joining us and for our very valued partnership with you. I want to let everyone know, too, that we have a lot of IRS links and resources at the end of today's presentation, including the one you've got on the slide in front of you, as well as the video and other IRS links that Don referenced are also on our website. We try to set it up so you can't, move around our website without tripping over those great resources. Thank you so much again, Don. And yeah, we're going to move forward. And next up, we're going to have Lori Schaller, my colleague, who's a subject matter expert on this, is going to be talking to us about ABLE and qualified disability expenses and sharing some, what does this mean for you? Information and some guidance around this. So, Lori?
Thank you, Miranda. So I just want to make sure that everyone understands that ABLE savings does not replace funding that may also help to address some of these items that are listed as qualified disability expenses. So please reach out in your community, see if funding is available for any and all of these items that you need, but know that your ABLE savings can be used to pay for education expenses, housing expenses, and that includes a mortgage, including property insurance, property taxes, rent, heating, fuel, gas, electricity, water, sewer, and garbage removal. Payment of these expenses will not reduce an SSI payment due to in-kind support and maintenance. In addition, transportation expenses are a QDE, Qualified Disability Expense, employment training and support services, assistive technology and personal support services, health prevention and wellness, financial management and administrative services, legal fees, expenses for oversight and monitoring, funeral and burial expenses, and other expenses which the IRS may identify in regulation or policy in the future. Next, basic living expenses as a qualified disability expense. So the Treasury Department and the IRS concluded in their proposed regulations that the term qualified disability expenses should be broadly understood to permit the inclusion of basic living expenses and should not be limited to expenses for items for which there is a medical necessity or expenses which provide no benefits to others outside of the benefit to the eligible individual. Neither the law nor proposed regulations insert disability related in front of its list of QDEs, suggesting that expenses like education, transportation, and housing should be permitted distributions that are needed with or without a disability. Next slide. So, although food is a basic living expense, it is one of several gray areas for which we are awaiting IRS final regulations which could affect SSA policy. What this means to you: we recommend using ABLE funds for items or services which clearly fall within one of the QDE categories previously listed, recommended by a healthcare provider, or which most people would view as a basic living expense necessity. These will be the least likely to be disputed should the IRS conduct an audit. Next slide. Miranda?
Lori. Right. Thank you, Lori. Okay, this next slide, I want everyone to, you're paying attention to everything, but we definitely hear questions about what if an ABLE account distribution is spent for a non-qualified purpose. And frequently there's some concern around what if that happens, and some fear around the implications around that. We want to be really explicit with all of you about what exactly does that mean, what exactly happens. So if the distribution is spent for non-qualified purposes, or if the total amount distributed during a year is more than your qualified disability expenses for that year, the earnings portion of the distribution is included in your income for that year. That's the consequence. So the tax on any distribution, the earnings portion, included in your taxable income is increased by 10%. For instance, a $10,000 non-qualified expense that had accrued $1,000 in interest in the ABLE account may count as $1,000 in taxable income with a tax penalty of $100. So the other thing to know is that if you spend the distribution within the month of receipt, there's no effect on supplemental security income SSI eligibility. A distribution is not counted as income by SSI even if it is for a non-qualified purpose. And a distribution for a non-qualified purpose or for housing is counted as a resource if retained beyond the month of distribution. So keep this in mind. Now let's go to the next slide and talk about best practices and qualified disability expenses. As Lori mentioned, please investigate all potential no-cost funding sources before using ABLE funds. It's just a best practice. Also, request a receipt for all ABLE transactions and maintain them in your records for 4 years. They'll be of value if there is an IRS audit. Write the type of qualified disability expense on the receipt for the purchase at the time of receiving that receipt. So for example, taxi receipt would go under transportation. A vision device purchase order would go under assistive technology. Financial counseling statement would go under financial management. A disability vacation, you'd need a script or flyer with a description regarding the vacation being disability specific. So please do that if you've gone on on something that is of the vacation nature. That's certainly a recommendation there. So if an expense falls within a gray area, we do encourage you to use money other than the ABLE funds for the purchase. Then you don't have to worry about it. And we just encourage generally, please make responsible decisions about those qualified disability expenses and exercise good judgment. It is meant to cover a broad array of things, but this is just best practice, and we wanted to make sure this was on everyone's radar. And with that, I'm going to hand it over to Lori to talk about tax incentives that help build ABLE savings. Lori?
Great. Next slide. So let's start with the ABLE state tax credit. Thousands of individuals have found the ABLE National Resource Center comparison tools helpful in selecting an ABLE program and then opening an account through their chosen state's website. Many individuals search their home state first to see if a tax credit is available in their state of residence or another state by going to the state comparison tool, and the link is posted below. For example, Wisconsin does not offer an ABLE account for their residents, but Wisconsin residents are welcome to participate in any ABLE plan that allows for out-of-state participation. And as a tax incentive, Wisconsin residents may apply for a state tax credit for any amount deposited into another state's ABLE account. What this means to you, well, a state tax credit may lower the amount of tax due, or it may even allow a state income tax refund. Next slide. The Savers Credit. The Savers Credit may be available to ABLE account owners who work and deposit a portion of their earnings into an ABLE account. Certain low and middle income workers are eligible for this credit, designed to reward them for contributing to their retirement plans if they are at least 18 years of old at the close of the taxable year, they are not claimed as a dependent, or they are not a full-time student, and they meet the income requirements outlined in the IRS Form 8880. And the maximum amount of credit is 50% of what is deposited into ABLE, and that is allowable up to $2,000 of credit. Distributions from the ABLE plan are also taken into consideration. So a person who contributes $10,000 into their ABLE and then spends $10,000 of that ABLE savings that year would not be eligible for the Savers Credit because they had spent everything that they had contributed that calendar year. Next slide. The non-refundable credit is up to $2,000 for an individual or $4,000 for a couple who each own an ABLE account or other qualified savings account for retirement, and they file jointly. To find more details, including instructions for completing the IRS Form 8880, you can follow this link. What this means to you, again, this non-refundable tax credit cannot be more than the tax you will pay for that particular tax year, but claiming the Savers Credit, you can reduce your overall tax liability for that calendar year. Next slide. If your employer provided dependent care benefits under a qualified plan, you may be able to exclude all or part of these benefits from your earned income. Your employer could tell you whether your benefit plan qualifies. If you paid someone, for example, to care for a child or another qualifying person in your household so that you or your spouse, if filing jointly, could work or look for work, you may be eligible for this credit. To claim the exclusion, you must complete Form 2441, the Child and Dependent Care Expenses. If you receive these benefits from your employer, you must complete Part 3 of Form 2441. 2441. And what does this do for a person? Well, it reduces the tax liability for that household for that calendar year, and perhaps can allow them then to save more that calendar year in another account. Next slide. Miranda, would you like to cover, oh, I'm sorry. And if you are self-employed and receive benefits from a qualified dependent care benefit plan, you are treated as both employer and employee. Therefore, you would not get an exclusion from wages. Instead, you would get a deduction in one of the following Form 1040 or 1040 SR schedules, Schedule C, line 14, Schedule E, line 19 or 28, or Schedule S. To claim that deduction, you must use Form 2441. And what this means to you, this is a non-refundable tax credit that gives back a portion of the money you spend on care and can reduce your tax bill by hundreds or even thousands of dollars. You can claim the credit regardless of income, but the credit gets smaller as the income for the household increases. Okay, next slide.
All right, Lori, I'll go ahead and take it from here. I also want to just chuckle for a second, the number of folks who've been asking in the chat for the download for today's PowerPoint. Yeah, I wasn't kidding at the top of the presentation saying there's a lot of good information in here, and we're laying all our cards out. So all this information we're going through, it's on the slides, including the resources and the links to where you need to go. So this is pretty chock full. So thanks for making those requests to get the PowerPoint. Please do take it with you. We have more to go, including covering Earned Income Tax Credit, or EITC. So the Earned Income Tax Credit is a benefit for working people who have adjusted gross income within certain limits. Even if a person does not owe any tax or they are not required to file, EITC may provide a tax refund, which certainly gives you an incentive to file. So using the EITC Assistant, and there's a link there, to find out your filing status, your child status as a qualifying child, your eligibility for the credit, and estimate the amount of the credit you may get. So EITC has special rules that apply for members of the military, as well as members of the clergy, and taxpayers with certain types of disability income or who have children with disabilities. Let's go to the next tax slide and look at just a few details about EITC and the maximum amount of credit for tax year 2020. So for 2020, that would be $6,660 with 3 or more qualifying children, or $5,920 with 2 qualifying children, $3,584 with 1 qualifying child, or $538 with no qualifying children. We provide the link here as well. I think it's also at the end in our resources. But what does this mean for you? If the Earned Income Tax Credit results in a tax refund, this is money that can be saved in your ABLE account. It's absolutely a best practice. We encourage you to consider it. So let's look at the next slide and talk about tax refunds and public benefits. Means-tested benefits like supplemental security income, SSI, and Medicaid do not count tax refunds as income. The SSI program does not count tax refunds and other savings up to $100,000 when saved in an ABLE account as a resource. And importantly, no amount saved in an ABLE account will affect Medicaid. So you could save any amount in your ABLE account up to that limit. It's not going to affect your Medicaid. Additionally, tax refunds can be directly deposited into an ABLE account, as I just referenced, if the annual contribution limit is not exceeded. These funds can be saved for an unlimited amount of time until you need to use them for a qualified disability expense. And as Lori mentioned, please look at other sources first. Finally, you can save all or part of your refund in an ABLE account. What you do is you use IRS Form 8888, that's 4/8, to split your refund for deposit into more than one account if needed, and we provide the link here. The next slide, let's talk about tax refunds and benefits, kind of final thoughts here. So when tax refunds are saved in a non-ABLE account, they do count towards the resource limit by means-tested benefit programs after 12 months. This is why we're recommending this as a great strategy. And what this means to you as an ABLE account is a protected account. And it's a great way to save for individuals who receive a means-tested benefit. If you do not receive a means-tested benefit, it's still a great way to save because your money grows tax-free. So here, I'm going to stop talking about this, and I'm going to introduce us to Andrew Camaro, who has a master's in science in financial services and is a certified financial planner, as well as being an ABLE account owner. Andrew opened a firm to help other individuals with autism spectrum disorder and all individuals who qualify for ABLE to help them become financially independent. As an ASD special needs advocate, Andrew researches and recommends ABLE accounts to families planning for their financial future. I do want to mention, because I know everyone's going to want to know this after hearing from Andrew, if you're searching for a financial broker like Andrew or anyone else, or an advisor or a firm to locate services like those that Andrew provides, you can use BrokerCheck to help you make informed choices. It provides easy access to investment advisor information. The link is here. It's brokercheck.finra, FINRA.org. You can search by name, firm name, city, state, zip code. But I want to ask Andrew, as an ABLE account owner and as a certified financial planner, we just walked through a number of tax credits and benefits that ABLE account owners, their families, and financial service team, including folks like yourself, Andrew, can look into. Can you share your thoughts from your unique perspective of being both an ABLE account owner and a financial planner?
Well, thank you for the great introduction. Yes, as an ABLE account owner, financial planner, individual with autism, I think the most important thing is to don't leave money on the table. I think there's really three parts to that. The first one, as you mentioned, is tax-free growth is a great benefit, as well as the potential for a state tax deduction. There's the state's incentives, and then there is tax credits, such as the Savers credit is the one that I really see overlooked a lot. Every state has different rules, and as was mentioned earlier, even for states that don't have their own ABLE, you may be able to have a deduction. ABLE National Resource Center has a great comparison tool.
Great. Thank you, Andrew. It was interesting. We did that poll at the top where about 7% of the folks listening in, and I think we've got over 382 actually participants. Hopefully we can get that above 7% who are using that Savers credit you just referenced. But speaking of which, one final question for you, Andrew. What is your most important tax time tip advice that you give on ABLE?
It really comes down to taking advantage of the state tax credit. It's so specific. And for example, even if some states will allow you to do any state, some you have to use their state, some you can do it for a college savings plan, and now with the new tax law, you can then move it into an ABLE account potentially. So I find that the state tax credit is really just, you always want to start there, and it's one of the easiest things to rule out or in and double check. That's free money.
Okay, great. Thank you so much for joining us, Andrew, and sharing your perspective. I'm actually going to hand things over to Lori to speak about now. And actually, Lori, I wonder if you can piggyback a little bit on what Andrew just shared about that state tax credit, because I know people might now have some questions about that. I think we might cover it in some future slides, but did you want to mention?
Sure. So the comparison tool, if you put in your state of residence, that will show you whether or not you qualify for a tax credit for contributions you or a family or friend may make to your ABLE account when you hold that account within your state of residence. And so we invite you to take a look at those tools. There are 3, and then there are also Excel spreadsheets at the bottom that go into further detail outlining all of the state's plans information. So I'd like to move on. Next slide. Thank you so much, Andrew. I agree with Andrew. We want to take advantage of every tax credit and deduction that we may be eligible for. And next slide. So the ABLE accounts, the IRS allows for a contribution of up to $15,000 for all ABLE programs across the United States in the year 2020, and that's a calendar year. The limit is the same as the annual federal gift tax exclusion defined by the IRS each year, so that may go up again in future years. Contributions may be made by the account owner, family, friends, or special needs or pool trust, and these are not considered taxable income for the ABLE account owner. What this means to you, so the special needs trust and pool trusts are taxed at a higher rate. It may be to your advantage to discuss transfers from these accounts to your ABLE account for qualified disability expenses. Next slide. Contributions by the account owner from their earned or unearned income does not change the way means-tested benefit programs count these contributions. So a person who works for an employer and is paid, that is still countable income even though the person may be depositing at least a portion of those earnings within their ABLE account. And those earnings, if the person receives SSI and or SSDI benefits, they are subject to earned income counting rules. And the same for HUD, for example. They will consider that to be earned income. But when a family or a friend makes a deposit into that ABLE account, directly into that ABLE account, that is not countable income for that individual. A working ABLE account owner may contribute additional money under the Able to Work Act into their ABLE account. Next slide. So that ABLE account owner who does not participate in an employer-sponsored retirement plan may make additional contributions from their employment, whichever is less, the designated beneficiary's earned income for the tax year, or the poverty line for a one-person household. For year 2020, this amount is an additional $12,490. So remember that everyone can contribute in every ABLE plan up to $15,000. If the ABLE account owner works and does not participate in an employer-sponsored retirement account from their earnings, if they live in the continental U.S., they can contribute an additional $12,490 into their ABLE account within the calendar year. Now, because the federal poverty level is higher for residents of Hawaii and Alaska, the amount they can contribute is even greater. So Hawaii residents may contribute an additional $14,380 from their earnings, and Alaska residents may contribute up to that $15,600 from their earnings. Okay, next slide. Okay, so that's a total on the next slide of $15,000 plus $12,490. That's totals $27,490 within a calendar year can be contributed to that ABLE account owner's plan. Over 10 years, this could mean ABLE savings of up to $27,490 plus interest that could be accruing on that account. The first $100,000 of an ABLE account is not counted by the SSI program as a resource. And please keep in mind, individuals who receive SSDI, there is no limit other than the plan cap of what is allowed to save in that particular ABLE plan for that state plan. So by working, the SSI payment may be suspended temporarily should that account owner's balance go above that $100,000 until their countable resources above that $100,000 threshold with their other countable resource falls under that individual breaking point. That's usually $2,000 for an individual or $3,000 for a couple. If earnings fall, benefits are restarted without a new application for SSI, and Medicaid continues during that period. Over time, an SSI beneficiary may become eligible for enough work credits to become eligible for SSDI or a retirement benefit based upon their work record. SSDI and the SSA retirement programs do not have a resource limit. So again, a person who receives SSDI benefits has no limit of what they are allowed to save within that ABLE account other than the state balance limit allowed for that plan. Okay, next slide. ABLE savings of any amount does not impact any type of Medicaid eligibility. And although Medicare does not have a resource limit, Medicare savings programs, the MSPs, which may pay Part B premiums, deductibles, and copays, have income and resource limits. Although earnings may affect eligibility for an MSP, ABLE savings are not counted as a resource, and therefore they have no effect on those plans. Next slide. So every year, I go to the IRS withholding calculator to see, given my projected household income and what expenses are that may be tax qualified, how much I should have my employer withhold from my pay. Or like when I'm retired, I'm going to ask Social Security Administration to adjust how much they withhold from my Social Security retirement benefit so that I receive the largest refund that I can, but I have more money to work with every single year, and I want to limit the amount of my refund to closer to $500. So by changing my withholding so that I'm getting like everything I possibly qualify for, but up to $500, I have more money to save for my goals this year. Okay, next slide. Miranda?
Great, thank you, Lori. Let's talk about employer contributions to ABLE. So an employer can make a contribution to an employee's ABLE account. The IRS has reported that the employer contribution is taxable income for the employee/ABLE account owner. The contribution, therefore, will be reflected on the employee's W-2. This is important to know. Let's go to the next slide and talk about ABLE program to ABLE program rollovers. So the entire balance of your ABLE account can be transferred from one ABLE program to another ABLE program through a rollover one time per calendar year. You have 60 days to roll over distributed funds from one ABLE program to another ABLE program, either established by you or by an eligible family member. Eligible family member means a sibling only, whether related by blood or by adoption, and includes brother, sister, stepbrother, stepsister, half-brother, and half-sister. If the entire balance is transferred to another ABLE account or to an eligible family member's ABLE account, your first ABLE account is closed after the transfer is complete. Unlike a 529 qualified tuition program, you can only have one ABLE account. So let's go to the next slide and continue talking about what we're going to talk about. So families may roll over funds from a 529 QTP, qualified tuition program, to a qualified family member's ABLE account. The ABLE account must be for the same beneficiary as the 529 account, that college savings account, or for a member of the same family as the 529 account holder. So rollovers from a Section 529 plan plus any other ABLE contributions or rollovers count toward the annual contribution limit of $15,000. So what this means to you: if you have both types of accounts, a 529 and a 529A, you may wish to consider a rollover. The expenses permitted under a 529 ABLE account are more broad than those allowable under a 529 qualified tuition program. And we have the link here. And if we go to the next slide, a distribution, here's rollover guidelines. A distribution from a Section 529 Qualified Tuition Program, or QTP, made after December 22nd, 2017, and before January 1st, 2026, is not subject to income tax if it is transferred to the ABLE account of the designated beneficiary or to a member of the beneficiary's family within 60 days of the distribution. You can also see the rollover from Section 529 tuition account to Section 529 ABLE account link later, and it's notice 2018-5858. With that, let's talk about some other factors that may impact an ABLE account. Lori?
Next slide. So loss of disability status. So if you establish an ABLE account and Social Security terminates your benefits, or if your medical provider indicates that you are no longer an eligible individual because, for example, your impairment goes into remission, then beginning the first day of the next year, no contributions may be accepted into your account. So if that happens, for example, this year, the person would be allowed to contribute into their ABLE account until the end, the last day of this year. For each tax year in which you are not an eligible individual, the account will continue to be an ABLE account, and the ABLE account will not be deemed to be distributed. Contributions may resume if or when you later become eligible again. Distributions from your ABLE account during a period you're no longer an eligible individual for do not have to be qualified disability expenses, and therefore are possibly subject to tax. The earnings portion of a distribution made from your ABLE account to you when you're no longer an eligible individual may be taxable. But let me put in a word of caution here. Many people who have a disability, who receive a disability certification from their physician indicating that their disability onset occurred prior to age 26, own ABLE accounts, and because their condition never goes into remission, even though they're able to work at high levels of employment and save for their retirement in several tools, they are ABLE eligible. But should a person's status change, that ABLE account continues to be owned by that individual. The next calendar year after the change in their disability status, they would no longer be able to contribute more money into their ABLE account, but they can always spend the money as they need from their ABLE account. Okay, next slide. So many of the ABLE accounts limit contributions, and they're sort of monitoring, so there isn't an accident that someone accidentally has more than the annual limits contributed to their ABLE account. But should that happen, excess aggregate contributions must be returned to contributors on a last in, first out basis. So the last monies that took that account balance over that limit would need to be returned to that individual. In the case of contributions that exceed the annual gift tax exclusion, a failure to return such excess contributions within the time period on or before the due date, including extensions, of the designated beneficiary's income tax return for the year in which the excess contributions were made in the year, the excess aggregate contributions caused amounts in that ABLE account to exceed the limit must be returned before the tax filing date. If not met, excess contributions will result in the imposition on the designated beneficiary of a 6% excise tax under Section 4973 on the amount of the excess contributions. So all of the ABLE accounts allow for access to view contributions made year to date, and so people can regularly check on the balance within their ABLE account. And so just another word of caution. So if a person has an ABLE account, they're not working, their annual contribution limit is $15,000 from all sources. Even if that person has qualified disability expenses that year and they spend down $10,000 from the $15,000 that was contributed that calendar year, they are prohibited from adding more money into their ABLE account that calendar year. Okay, next slide. Okay. Distribution of a retirement account into an ABLE account and taxes. It is not possible to directly roll over retirement savings from a 403B, a 401K, an IRA, or a defined contribution fund into an ABLE account. A person may be eligible for a disability consideration from the administrator of those accounts regarding early withdrawal and tax penalties prior to age 59 and a half. The exemption for a permanent disability requires proof of disability from a physician and only exempts the 10% early withdrawal tax penalty, not any income taxes due on that distribution. Therefore, a person should reach out to their tax consultant prior to requesting a withdrawal to see what that tax implication would be for that individual. So, and we know that several Medicaid programs look at retirement savings as a countable resource. And again, this is why an ABLE account may meet many individuals' need for having a place to save for their retirement, for their future. Okay, next slide.
Okay, Lori, we want to talk about ABLE tax forms here. So just want to share these two tax forms. Form 1099-QA for distributions from an ABLE account. So an ABLE program issues this form to ABLE account owners in the IRS to report all distributions made from the ABLE account, investment earnings, ABLE to ABLE transfers, or termination of an ABLE account. Next up is Form 5498-QA, ABLE account contribution information. So an ABLE program issues this form to the ABLE account owner annually to report contributions, including rollovers, fair market value of the account, opening of a new account, certification of a qualified account, and the disability code. If you have any questions about the amounts on these forms, we encourage you to contact your ABLE program administrator. So Lori, can you talk about increased savings through employment and benefits planning?
Yes, next slide. If you are working or plan to become employed and receive a disability-based benefit from Social Security, seek guidance from a Community Work Incentives Coordinator, a CWIC, who works for a Work Incentive Planning Associate, a WIPA, to understand how working affects all public benefits that you receive. Benefits counseling services are free, and they can help you to understand how working affects benefits and how you can make good decisions for yourself towards your financial goals. A benefits counselor can help you to use the work supports that Social Security or other programs offer to help you to become employed, to work at higher levels, or to transition off benefits if that is your goal. To find a certified counselor in your area, visit choosework.ssa.gov. And you'll be able to click on the Find Help button, and you'll be able to find your local WIPA service provider. Next slide. ABLE investments grow tax-free. ABLE plans offer savings account and investment options. Some ABLE savings accounts offer FDIC insurance for the checking debit card account option, and some allow for interest growth. The investment options allow for investment growth too. In an ABLE account, earned interest is not considered income for SSA disability benefits, any means-tested benefits, or for income taxation. Next slide. And I would just like to comment too, because an individual owns an ABLE account, it is not necessary that that person necessarily also file taxes. That person would file taxes if they have earned income from employment, or they need to file taxes because of other sources of income. But that's then the opportunity for that person to qualify for different tax credits and deductions. So best practices: maintain records of all account distributions along with receipts for purchases for 4 years. Make responsible decisions about QDEs and exercise good judgment. Use ABLE funds for items or services which clearly fall within one of the QDE categories. In the next couple of months, we're going to have a webinar specifically about what qualifies as qualified disability expenses, and recommended by healthcare providers, or which most people would view as a basic living expense or a necessity. These will be the least likely to be disputed, and investigate potential no-cost funding sources before using ABLE funds. Educate yourself and keep up to date by signing up for the Achievable newsletter, and deposit your refund, your income tax refund, into your ABLE account, at least a portion of it, and figure out a plan for saving regularly into your ABLE plan. Miranda?
Well, hey, Lori. Okay, great. Yes, next let's talk about free tax preparation services. And you covered that slide for me, so let me just tell you really quickly. Free tax preparation services, you can use these tax preparation services to help ensure that you receive the largest refund possible. So there's an IRS 2020 tax calendar. Additionally, there's My Free Taxes, where there's no income limit to accessing that support through the United Way. If you're unable to complete your tax return because of a disability, you may be able to obtain assistance from an IRS office or the Volunteer Income Tax Assistance or Tax Counseling for the Elderly programs that are sponsored by the IRS. We've provided that link here. Additionally, there's tax assistance for individuals with disabilities and the hearing impaired. Lori, did I cover that for you okay?
Yep, great. And also, next slide, there are military personnel free tax preparation services. So they really have received specialized training to help them with all the tax credits and deductions that military personnel may be eligible for. So please check that out. And the links are provided here on this page. Miranda, would you like to cover the next polling question?
Yeah, we have one polling question and then just a couple slides and we're done. So let's go to the polling question real quick and just ask, which of the following, Hope, if you can go ahead, Maggie, post the polling question while I read it, that'd be great. So folks can answer it on their screen, but I'll go ahead and read it. Which of the following will you now be looking into further as you do your 2020 taxes? A, free tax preparation services. B, ABLE tax advantages. C, ways to increase ABLE savings. D, qualified disability expenses, or E, all of the above. And you can select all that apply. So let's give just 20 seconds here for folks to click on the screen, let us know where you're at now that we're coming to an end. Okay, let's go ahead and 5 more seconds. Get some more answers in. Okay, Maggie, Hope, can you show us the results? All right, 53% said all of the above. That's great. That's what we like to see. 16% for QDEs, 11 for ways to increase ABLE savings, 15 for ABLE tax advantages, and 5 for free tax preparation services. All right, great. Well, as we're wrapping up here, we did want to share with you, we've got some resources here at the end, but we also wanted to take a moment and get an important update from Social Security Administration. So I'm actually going to open the floor. Well, we want to get a word from Joey Hill with Social Security, but before we have Joey speak, I'm going to speak to slide 57, Hope. And Maggie, if you could share that, I just want to cover this first couple of slides and then we'll get specifically to SSA's information. We wanted to share with everyone that federal agencies are currently fighting scammers. The Internal Revenue Service, Department of Commerce, Census Bureau, and Social Security Administration continue to alert people about ongoing nationwide scams. We're on slide 57. So fraudsters use phishing emails, texts, and phone calls to trick unsuspecting victims into revealing personal and financial information that can be used to steal a victim's identity and money. Hope if you can get us to slide 57, that would be great. We want you to know that you will never be threatened by a government official, nor will you be asked for personal information, money, or retail gift cards to fix a problem or to avoid arrest. On the next slide, we have some information on how federal agencies are fighting those scammers, some resources for you in order to report phishing and online scams. We provide a link for the IRS for that, as well as information for the Census Bureau. It's important to know that phone calls, if you're receiving any, you can contact the National Processing Center to verify the caller is a Census Bureau employee. For visitors, they can check the identification badge if anyone's showing up at your residence or place of employment. If you're still unsure, you can contact the Census Bureau regional office for your area of the country, and you can also email them as well. So this is kind of broadly for IRS and Census Bureau. This next slide, slide 59, if we could go to that. I know that that's where Joey is going to cover this slide and the next one specific to SSA benefits and scammers and things to know. Joey?
Good afternoon and hello to everyone. Thank you, Miranda, and to the ABLE National Resource Center for allowing me to speak on the webinar today. We here at Social Security really appreciate the opportunity to speak to everyone. I'm going to share information as Miranda explained about our Social Security imposter scam. We do not know if people who have ABLE accounts are being impacted by the Social Security imposter scam, but we wanted to make you aware of it anyway. And as Miranda mentioned, these scammers pretend that they're from Social Security or another government agency. Caller ID or documents sent by email may look official, but they are not. And phishing is the criminal act of trying to get your information, which includes your usernames, passwords, Social Security numbers, bank account or credit card account details by pretending to be an entity that you trust. Phishing emails often direct you to a website that looks real, but it is fake and may be infected by malware. Can we go to the next slide, please? Social Security does not contact people unless it's for official business purposes. SSA will never, and I want to repeat this again, never threaten a person, promise benefit approval or an increase in benefits in exchange for information or money. If this happens, we ask you to hang up the phone immediately. SSA mainly calls people who have recently applied for an SSA benefit, someone who is already receiving payments and requires an update to their record, or a person who has requested a phone call from the agency. If a person is not in one of these situations, they normally would not receive a call from Social Security. If there's a problem with a person's Social Security number or record, in most cases, Social Security will mail a letter. If a person needs to submit payments to Social Security, the agency will send a letter with instructions and payment options. People should never, and let me repeat this again, never provide information or payment over the phone or internet unless they are certain who is receiving it. If you are contacted by a scammer, again, please report it to Social Security. You can report the scam at oig.ssa.gov, and that is Social Security's law enforcement team, and that is the Office of the Inspector General. If you're unsure of the legitimacy of correspondence or contact, call Social Security or contact your local Social Security office. Our National Teleservice Call Center number is 1-800-772-1213, or you can always visit your local Social Security office. We thank you for the opportunity to share information about the Social Security imposter scam, and I'm going to turn it back over to Miranda. Thank you again.
Okay, great. Thank you so much, Joey, for sharing that important message. And if you happen to be visiting your local SSA office, you'll probably see on the SSA TV screens information about ABLE that's being shared there. Okay, so we have concluded the bulk of our presentation. Now this is just some next steps and resources for you. So we do want to encourage you all to join us again next month. If we can go to the next slide, in March, we're going to be doing a spotlight on the California ABLE program, Cal ABLE. That's going to be March 12th from 2 to 3:15 p.m. Eastern. They're going to be sharing information about their state program, which is open nationally. They came on board in December of 2018. So they're fairly new on the scene. They've got lots of great resources they're looking forward to sharing with us, such as their Achievable Corner and other things that they can provide. So we encourage you to join us next month and register here with this link. If we go to the next slide, you can see we have ABLE accounts and tax time savings fact sheet. So here's a fact sheet to download, as well as more information on ABLE and tax benefits. And this information, of course, also includes information around qualifying for state income tax deduction, savers credit, all those things we've been talking about here. Good, important information for tax filers to have. These are great takeaways. If we go to the next slide, it's just going to be other resources, and you're going to see there's a lot of resources that direct you back to the ABLE National Resource Center, as well as the IRS's page information. We know you're all going to be checking out their YouTube channel now as well. Thank you, Don, for sharing that. Finally, I want to mention slide 65, America Saves. So America Saves is a campaign coordinated by the nonprofit Consumer Federation of America. America Saves Week is February 24th through February 29th. It's dedicated to helping individuals save money, reduce debt, and build wealth. Since 2007, America Saves Week's been an annual celebration, as well as a call to action for everyday Americans to commit to saving successfully. So by participating in America Saves Week, individuals navigate through different areas of their finances that better position them for success. And by the end of the week, they'll have addressed short-term and long-term savings goals, such as emergency funds and retirements, all the way through. The best strategies for saving successfully, making a plan, saving automatically, some of those deposits we talked about, and how to have healthy conversations and instill positive financial behaviors within your families. So we encourage you to check in on your financial health during America Saves Week and make a commitment to save successfully. There's some great links there for you. And finally, I just really want to thank all of you for joining us here today. I'd like to thank our presenters and guests who have joined us and shared their expertise. And please take just a moment to fill out our post-training survey. Let us know what you thought of today's information and any other comments or feedback you might have for us. And again, thank you so much for joining us. Have a great rest of your day, everyone. Oh, and Maggie's reminding me to tell everyone the resources and tools are available at ablenrc.org. You can find the webinar archive located there as well within the next couple days. Thanks, everyone. Bye.